Mihir, great to have you on the show. Congratulations. Great set of earnings. It's been an extraordinary quarter. Can it sustain?
So we indeed had a great performance. While the total revenues grew 13.7%, our advertising revenue has been the highlight for the quarter at a 29.1% growth. But I must say that the full year ad revenue growth has also been very good for us at a 28.9%. Of course, the sustainability of that is to be seen in the context of various factors, including AND-TV, which was not in the base in FY15, and therefore the FY16 growth for the full year looks as high as it is. What we expect from a sustainability point of view for next year is that we should certainly grow in line with market. And then beyond that, we should be able to leverage our increasing viewership share to hopefully grow ahead of market. I think from a highlight standpoint, clearly advertising revenue has been great. What we've also done is that on the investment side, we've been very, very prudent about the investments we make, and therefore our EBITDA in Q4 grew at a staggering 53%, 52.8 to be precise, clocking a 414 crore of an absolute rupee amount. So this is like I said, a great quarter for us.
Sure. Now, your EBITDA has seen a phenomenal growth, and in fact, analysts say that they expect EBITDA growth for FY17 to remain strong at 20% plus. Do you think you can sustain your EBITDA?
I think the way that we would want to look at it is in the context of the investments that we will make next year, because while we've been prudent on our existing cost structure, and which we will continue to be, the investments for growth should also continue for the future of the company. Our investments will be in the international businesses like we've been talking about over the last couple of years. The digital business will also require some investments, and of course then there is AND-TV, which is in a growth phase as well. Our objective would be that despite those investments, we maintain or at least try to slightly improve our margin. So that's the way we are looking at it in terms of the profitability for next year.
Right, Mihir, the key highlight was that big growth in ad revenues this quarter around. Are you confident of maintaining this run rate for into FY17 for each of the quarters?
Our ad growth rate has come from essentially two factors. One is AND-TV, which clearly for the full year has given us a certain percentage extra growth because of it being not in the base. Having said that, our underlying base businesses, which is our regional channels, our national channels on the movie side, as well as the GEC, all these have contributed by increasing their viewership shares in a very good way. And therefore, the year that went by has had contributions from all these factors. Now talking about the next year, there will be let's start from the market base itself. We expect the market to grow at about 15 to 16%, and that will be on the back of, if I can broadly put it, FMCG continuing to have a healthy pace. Of course, within the FMCG industry, there are dynamics where, as usual, some companies may spend a little less or grow at a slower pace, whereas some companies like Patanjali will add significantly to the ad pie. So FMCG we expect to contribute healthily to the growth for next year. And at the same time, you will have the auto and the telecom. So telecom, in view of the 4G launches that are being planned, that will also add to the market growth rate. So that is how we expect the 15-16% to hold up. Subsequent to that, we will continue to focus on our businesses to grow viewership share, and ultimately advertising growth or ad revenues are a function of viewership. So once we have success on that front, the ad dollars will simply follow.
Okay, and how much have been the sports losses in the fourth quarter, and will they continue to trend up?
So Q4 sports, we lost about 24 crore with a full year loss of about 35 crore. I think next year may be a little higher than that. We may see higher, not little, maybe a much higher loss than the 35 crore that we've posted for full year FY16, because there are two India series happening, West Indies India and Zimbabwe India, which tends to be a little more loss making than some of the other properties that run on the channel network.
Mihir, in terms of acquisition and inorganic growth opportunities, are you open to acquiring other TV channels or entering into new business segments like radio perhaps?
So we are always open to various growth opportunities, including acquiring new TV channels or radio or any other for that matter. So like we acquired the Odia channel in the last fiscal. We would keep looking and opportunities that keep coming to us, we would keep evaluating those, and if it fits in from an overall perspective, including the various variables that go in such decision making, we will make those decisions accordingly. So we are not close to it, we are open to it.
Okay, and before we let you go, if you can leave us with the guidance for FY17, especially subscription revenues, which may get impacted due to a delay in digitization.
While the digitization has been progressing at a reasonable pace, there are a couple of other variables that have come in recently. One is the TDSAT order, because of which from 1st May all broadcasters have had to move to the RIO pricing. So that's one variable and an uncertain, if I can call it that, of how it will pan out and how it will get implemented as we go through the next few weeks and couple of months. Then the second variable is the TRAI guidelines which are being worked upon as we speak, which may be announced over the next couple of months, and that's another variable of what that regulation will look like. So there are these variables and uncertainties that will pan out over the current fiscal, the FY17. Having said that, the interplay of those will be difficult to predict, but we believe that next year a mid-teens kind of growth on the subscription, on the domestic subscription line item, should be reasonable to target and achieve.
Great. These are great set of numbers and good boost coming in on ad revenue as well as subscription revenue. So thanks very much, Mihir, for joining us and giving us more details on those earnings, and we wish you all the best for the future.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.